All right. Welcome to the 40 Finance channel. There's been a lot of whispers that I'm hearing in the market that perhaps we're about due for a pullback. People saying the market's running too hot, valuations are ridiculous, etc. And so, what I thought I would do today is take the Magnificent Seven. We talk a lot about the QQQ on this particular channel. So let's look at the Magnificent Seven today and let's focus on the forward projection. So the forward valuation multiple slash P ratio, the forward EPS projections. Let's see where those sit today and compare that to sort of a 5-year average for each of these stocks to try to get a barometer of, how hot are they really running? And what you'll see that I found is, some of the hottest names, the top 2 or 3 hottest names, are really kind of right in line with where they've trended over the past 5 years. But there's definitely some surprises in there when the numbers get a little murky for the bottom half of the Mag 7. Now for the video today, all of our data on consensus earnings, multiples, etc. is coming directly from the Seeking Alpha platform. This is the website that I use in all my videos. And if you're interested in learning more, potentially supporting my channel, check out the special offer for Seeking Alpha Premium down below. You get a free 7-day trial on the front end before your card is charged, and you get a nice discount on the first year of your membership. Now, just to lay the groundwork here for what we're going to be doing across the Mag 7, it's really just simple fundamentals. All these stocks are profitable. All these stocks have an EPS. All of these stocks are established. All of these stocks have multi-year track records. They're all in the QQQ. So what we're going to do today, we'll take the forward EPS consensus, and you see I say note the fiscal year. Some of these companies report in June/July. I believe the broad majority, though, report at the end of the year, and the earnings call for those companies is going to be in January or February. So in some cases, we have to project out further ahead. I'll make a note as I'm going through the numbers for each one. After the EPS consensus, we'll look at where the forward PE stands today. Then we'll look at the 5-year average. All this stuff is in Seeking Alpha. And then last note here, the last 2 stocks, they get a little more murky just because of their recent history. I'll get into that in a minute. All right, first on the board here is Apple. And you can see that Apple's fiscal year ends at the end of September. So this would be an earnings call likely into October, November. The good news for that with a company like Apple is this is going to be the number that's mostly focused on. We don't have to worry about the market's focus, a transition from 2024 to 2025. What numbers are they looking at? This is the number. The current consensus is $7.39. That puts today's price at a forward PE of 35.03. Okay, now, luckily in Seeking Alpha, they stack up 5-year averages. So if I go to PE gap forward and we look at the 5-year average, the 5-year average for Apple is 28. So over the past 5 years, Apple has traded at about 28 times its forward earnings consensus. So Apple's share price today, at least when I typed up these numbers, $254. Okay, $254. September 25, the EPS number is 739. Forward PE today is at 35. We saw the 5-year average of 28. You took 739 times 28. That gives you a share price of 206.92. Call it 207. That is minus $47 from where we are today. Now, just for kicks, I also tried Apple with a 30 multiple. So we're at 35 today. Average is 28. What happens at 30? The price goes to 221. So with this simple exercise, at least for me, I would say Apple stock is running hotter than average, at least for now. The caveat with Apple that most people know is they buy back a ton of shares. And we also have the iPhone release. We don't ever know how popular it is until they report the Christmas number. But in terms of what we know today, I'm not saying sell Apple. I'm saying if I was looking for an entry price on Apple, For me personally, that price would be much closer to 207 than it would 254. Next up, we've got Nvidia. Now, with Nvidia, we have a fiscal period that begins at the end of January 2025. Okay, so they still have a little bit of time left in their fiscal year. The current year is projected at 295. Forward PE is 47. Now, since we're so close to that date of January 2025, there will be a time in the next, I'd call it 60 to 90 days, probably after they report this one, that all eyes are going to be on the 2026 number. So it is important because it's substantially bigger. So at some point, they're going to shift. When I say they, I mean Wall Street will shift focus to this 443. But for now, they still have to land 295. That's not in the bag yet. They still have to produce the earnings that do that, and they're trading at 47 times that number. All right, next we look up the 5-year average. NVIDIA is a non-GAAP company. They reported non-GAAP. So we have 5-year average, 47.77. And that is for a period that's ending in the next 30 to 40 days. So 47's across the board right now for Nvidia. And what does that mean? Well, price today is about 136. You got a 295 EPS, forward PE of 47. It's almost exactly the same as the 5-year average. So let's just call Nvidia flat. And if you want to look ahead to next year, I made this note. If you took 443, which is the projections for the end of the 2025/6 fiscal year, 443 times 47 is 208. So in a perfect world, if you bought Nvidia today at 136, which I would say is not a bad price at all. It's right about flat with the 5-year average and multiple over the next 12 months. There's a very realistic expectation if they hit their numbers that they would get over $200. All right, next is Microsoft. Microsoft, like Apple, has a little different fiscal year. It ends after June. And the current estimate, which is going to be the focus for, the next 3 or 4 months, is 1304. Their forward PE today is 33.59. All right, let's look at the 5-year average. This is a GAAP company. 5-year average is 31.65. So not a huge difference there. 31.65. What does it all mean? If we bring up my Microsoft numbers, today you're at 427. EPS of 1303 times today, you're getting 33 in your multiple. 5-year average, I rounded it up and gave them 32. So 1303 times 32, that's $417, I would say, is the eyeball fair valuation for Microsoft based on how they've traded over the past 5 years. Now, yes, Microsoft's trading $10 higher than that today, but that's not that big of a spread between, arguably fair value and where you stand today. If you are looking to start a Microsoft position, maybe you wait till it gets under 417, but you're so close, I'm not even sure how much it matters. The other thing that you could do, which is always wise, is to spread out your purchases across time. You don't have to buy the whole thing at 427, right? What about Google? All right, Google is going to be very similar to Nvidia. Their fiscal period actually ends here in just a few days. So they're likely reporting at the end of January. They need to hit this number before you can look too far ahead. But $7.98, can they hit that EPS, at least that number in EPS? And if so, the forward PE would be at 24. If we look ahead to 2025, which basically 45 days from now is going to be the next focus for investors, the number goes up to 895. Forward PE in that stretch would be 22. Now, if we look at 5-year average, they are a GAAP company. We are looking forward. And how about that? The 5-year average is actually higher than today's multiple of between 22 and let's just say it's 24. All right, how did those numbers stack up for Google? December 2025. So I'm skipping ahead to the next fiscal year. 895, current forward P of 22. If you change that to the 5-year average of 25, 895 times 25 equals 224. Now, the only potential wrench here is Google still does have to land the plane for December 2024, right? They still have to announce successfully that they hit that 798 or whatever it was for the 24 calendar year. But overall, I definitely think there's some room to play here with Google, assuming that their next earnings report is at least positive. Here we go with Meta, traditional fiscal year. So coming up, same situation as Google. If we look ahead to 25, EPS estimate of 25.42, forward PE 23, basically 24 if you round it up. Now, what's the 5-year average? We got another GAAP reporting company. So we're right here. Their 5-year average 23.26. So basically in line from a multiple standpoint. All right, putting it all together for Meta, you're at 593 today. The 2025 EPS at 25.42 is currently trading at a 24 multiple. If you want to get nitpicky and there was a decimal involved, you could say 23. So taking 25.42 and then going down 1 on the multiple puts you at 584. If you're looking to get into Meta for the first time, then you're probably trying to sneak in under this number or spreading out your buys. Okay, I promised you the last two are tricky. We'll start with Amazon, currently waiting to land 2024. Current projections 513, which is a forward PE of 44.26. If we look ahead to next year, the estimate is $6.17. Forward PE is 36.79. Now, the problem with Amazon is they had a stretch where they did not have an EPS over this past 5 years. Okay, so coming out of COVID and the transition in CEO, so our 5-year average is going to be a little strange. First of all, we're going to go non-GAAP, and you see 44.26 is the current multiple. The 5-year average of 177, it looks like they're crushing that. But remember, some of those years were net negative, so they don't even really apply. So you have to use a little common sense on Amazon. Okay, so here's what I did. We'll look ahead to next fiscal year. We'll just assume they land 2024 as planned. The focus will shift to this EPS of 617. That's currently a forward PE of 37. We can't rely on the 5-year average because of the murky history. So for me anyway, if you're talking about forward earnings multiples for Amazon, 30 seems fair in my opinion. Okay, now currently at 37. So there's obviously some people who will pay more. But if it was 30, that puts you at 180 and you're down about $42 from today's price to get to a fair valuation, at least in my opinion. But when I look at Meta, forward PE of 23, Google 25, Microsoft 32, Nvidia is a whole nother beast because of their growth rate is far superior to everybody else on there. Amazon does not have far superior growth rate. So I'm putting it at 30. That's my call. All right, last one on the board is Tesla. And Tesla hasn't made sense fundamentally forever. So why should any of it change today? But for the purpose of this video, I'm just going to share the same calculations for Tesla that I did for the other companies. Now, Tesla is profitable, but obviously over the past 5 years, they have not always been profitable. So we're going to struggle with the 5-year average again. December 2025, when that fiscal year ends, current estimate is 326. That would put your forward PE at 139. And with Tesla, we'll be talking non-GAAP again. Here's your 5-year average. It's 114. But again, you had some years where there was no EPS, so there's no PE, so 5-year average is sort of tough. But for me personally, I would go back here and eyeball the growth rate. Okay, 2025 EPS growth rate plus 30%. Okay, very strong. Not a lot of companies are going to be able to do something like that. Consensus revenue estimates next year, approximately 16%. Okay, so again, you got double digits top and bottom line. That's sort of the gold standard when you're looking at different companies. Here's what I put together on Tesla. Current price of 427, EPS of 326, forward P is 139. We don't have a 5-year average. I chose the number of 47. 326 times 47, which I stole from Nvidia, okay, that's a price of 153. All right, so you're obviously way in the hole by, $300 plus if this fundamental view were to ever take shape. And for what it's worth, on my opinion, like I said, Tesla hasn't made sense for a long time. Nvidia is without question the fastest growing stock out of this bunch on the Magnificent Seven. So I felt like I did Tesla a favor on the 47 times multiple. But Tesla stock always has plenty of buyers, and they've been able to maintain that across time. My take would be if you don't have Tesla and you're thinking about buying Tesla, it's hard for me to look at things fundamentally and say now is a really good time to get in. All right, guys, so that is a fundamental look at where all the Mag 7 stocks stand today. Before you go, don't forget to check out that Seeking Alpha special offer in the description. Potentially support my channel at the same time. Hope everyone is doing well. We'll see you on the next video.